Hey everyone, I'm Zach, aka SPAC Zach here, and welcome to my YouTube channel. My goal is to help you guys find the next home run SPAC play. What began as an interest quickly became an obsession with these SPACs. With the increase of SPACs flooding the markets, it became more and more evident that traditional IPOs may slowly become a thing of the past. Now you may be asking yourself, who the heck's got the time to research all these up and coming new SPACs? Well, ask yourself no more. I'm here to present every SPAC on my ever-growing list of special purpose acquisition companies. How's it going, ladies and gentlemen? SPAC Zach here, and welcome back to my YouTube channel where we try and cover every single SPAC in the book. Now, today's episode will be covering ticker THBR, that's Thunderbridge 2, who's looking to acquire and merge with Indie Semiconductor. Please always remember that this is not financial advice. I am not a financial advisor, so please always do your own due diligence before selecting any of these stocks. So what does Indie Semiconductor do exactly? Well, Indie Semiconductor is a leading pure play provider of next generation semiconductor and software solutions for the rapidly growing auto tech market, enabling autonomous connectivity, user experience, and vehicle electrification applications. Okay, so let's take a quick look at the management teams between Thunderbridge and Indie Semi. So taking a look at Thunderbridge's CEO, President, and Director, Gary Simonson, he has over 30 years of experience as an investor, entrepreneur, and M&A advisor. He held managing director roles at First Capital Group, an investment banking advisory firm. He also served in a number of leadership roles in the banking industry. Now taking a look at Chairman and CEO of Indie, Donald McClymont. Prior to co-founding Indie, Donald held executive roles at Axiom, Skyworks Connection, and held early career roles as an engineer and sales and marketing agent. He was also named Top 100 Most Intriguing Entrepreneur by Goldman Sachs in 2020. Now taking a look at Chief Financial Officer and Executive Vice President of Strategy, Tom Schiller. He previously led corporate development strategy, M&A, marketing, and IR roles at Marvell, Skyworks, as well as Rockwell Connexent. And he himself has closed over $5 billion worth of transactions and 20 global acquisitions. So let's take a quick look at the investment thesis for Indie Semiconductor. Indie offers next-gen automotive semiconductor and software platforms, solving most of the world's complex and demanding challenges. Now they have over $2 billion in strategic backlog and revenue visibility through 2025. Now this is driven by deep relationships with top tier 1 automotive suppliers. Now Indie is well positioned in a massive secular growth market with high growth, margin rich, $38 billion in serviceable available markets by 2025. And now Indie has a proven leadership team with track records of extraordinary value creation. And now the transaction Indie believes will accelerate the roadmap and drive substantial growth and profitability for the company moving forward. So let's take a look and see what Indie Semiconductor's next generation of automotive platforms have to offer for us. Now they have to offer a massive market opportunity with $33 billion and rapidly growing total addressable market that's supported by multiple automotive megatrends. They offer a competitive differentiation with unparalleled semiconductor and software integration with efficient design processes. You can take a look and see that these are some of the companies they're currently contracted with. Now taking a look at their deep sales penetration, like I said earlier, they have over $2 billion worth of strategic backlog, which is underpinned by 28 customer contracts across a diverse portfolio. Now looking at their superior financial profile, over the course of 5 years, their compounded annual growth rate is expected to be around 85%, which is very good. So Indie is enabling a diverse set of transformative automotive trends. They believe that the automotive semiconductor market is at an inflection point. Taking a look at this little graph here, you can see the global automotive semiconductor total addressable market in billions. Now, in a 6-year span, they believe that their compounded annual growth rate is pretty much going to double between 2020 and 2025. Now, not completely double, but close to it. Taking a look at the chart on the right, that's Indie's addressable market in billions. So feel free to take a pause and look over that little graph there as well. So driven by silicone content gains, Indie believes that this is going to create significant opportunity for them moving forward. Taking a look at their content per vehicle, currently they're sitting at around $310 per vehicle. In the near future, they expect about triple that to $975 per vehicle. And then in the future, they expect that to over 10x to about $4,000 per vehicle. Now, I'd like to just show you this graph here real quick. It represents the cumulative unit shipments from 2011 to 2020. As you can see, robust growth, absolutely. They've already shipped over 100 million devices to automotive tier 1s. Now, Indie is also planning on increasing OEM penetration and content per vehicle moving forward. Let's take a look at some key competitive differentiators for Indie Semiconductor. Now, they offer best-in-class mixed-signal SoC solutions. By leveraging manufacturing technologies and proprietary packaging techniques, they're able to drive integration up and costs down. Now, they offer innovative product roadmaps, reliable, geographically diverse, highly scalable supply chains, and they also meet as well as exceed all key quality standards. Let's take a look at 4 key growth drivers for Indie Semiconductor that should help propel them to high growth in the future. You got their autonomous and ADAS, which is their advanced driver assistance systems. You got the connectivity, user experience, as well as the electrification of vehicles. So looking at the AI portion, you can see that their LiDAR integration reduces power by 10 times and cost by 20 times. Now, from a connectivity standpoint, they offer wireless charging, telematics, driver monitoring, as well as cloud access. Now, Indie also plans to enhance the user experience by offering CarPlay solutions, infotainment, as well as LED lighting. And finally, Indie wants to help in the accelerating of electrification by offering charging controllers as well as diagnostic solutions. All right, just to go over a rundown of financial highlights, like previously mentioned, they have an accelerating growth trajectory, compounded annual growth rate of about 85%. Also previously mentioned, they have over a $2 billion worth of strategic backlog. Now, this creates strong visibility for them moving forward, 60% of which aggregate revenues through 2025 are already shipped. Now, taking a look at their operating leverage, this produces 30% target earnings before interest and tax margin. Now, this is driven by higher margin product mix. And then you look and see they have a capital efficient fabless business model. Now, this is going to allow for highly scalable global supply chains. Now, taking a look at Indie's strategic growth initiatives, they plan to acquire enabling technologies to help accelerate organic growth development. Taking a look here, you can see they plan on moving in 3 phases over the next 4 years. Now, feel free to pause and take a look at this graphic. Okay, so let's take a quick look at Indie's financial summary. Like I previously mentioned, over the next 5 years, they're expecting a compounded annual growth rate of about 85%, which would put them at about $501 million in total revenue coming in fiscal year 2025. Now, I'll remind you that's just an estimate. Now, taking a look at their gross profit margins with a company like this, or any company for that matter, once you move up in scale, you should also in turn see a rise in profit margin, which we are seeing with this company. Between now and 2025, we're expecting about a 15% increase in profit margin, so that's always a really good sign. So let's take a look at this graph here. It puts into perspective Indie's valuation multiple for us. On the x-axis, you can see we have compounded annual growth rate through 2022, and on the y-axis, we have enterprise value over earnings before interest, tax, depreciation, as well as amortization. You can see that Indie's actually fairly undervalued and well positioned to grow compared to their peers like Cree, Ambarella, MPS, who are also in the semiconductor industry. So basically what this shows me is that Indie is pretty undervalued, and I think as a stock as well. So this company is going to have plenty of room to grow here in the future. Okay, taking a look at the one-day chart, you can see we're currently sitting at $12.50. Now we're pretty close to the floor here. I definitely expect this stock to increase over the next couple of months. I easily can see this tripling, quadrupling over the next year. For those of you who don't know, there is currently a shortage of semiconductors out there. So due to the scarcity, that's going to put Indie Semiconductor in high demand, thus creating, great revenue for the rest of the year. I definitely expect their quarterly reports to be very positive. So keep that in mind when investing in this. We're so close to the floor right now that it's almost like, how can you go wrong? And taking a look at the 3-month chart, you can see we obviously got that big initial spike upon the rumors of the merger with Indie Semiconductor. We saw it shoot up about 36%, then obviously cooled off a little bit. The day traders, they took their money and ran with it. And then you could see we got another little dip over there. What that probably was, in my opinion, is that's going to be caused by the GameStop and the meme stocks that everybody was piling into, because these are all speculative plays. So I think people took their money out of, a lot of these SPACs and moved it into, GameStop, Nokia, BlackBerry, AMC. And you can see we're starting to rebound here. And I do believe they're going to be announcing the merger here in the next month or two, definitely within the first quarter of this year. And in terms of a price prediction, like I mentioned previously, I definitely see this 4xing, so easily getting to $50 by year end. If you compare it to AMD, another semiconductor company that I really like, they're sitting around $87. I previously bought them at about around $50 back, I think in June of last year. So I definitely see this Indie Semiconductor having high potential. I rode AMD all the way up to 96-ish when I sold it, and it's just been hanging around there for a while now, so I could easily see Indie Semiconductor taking off this year. Thanks for tuning in today, ladies and gentlemen. I hope you enjoyed today's episode covering Indie Semiconductor. If you did, please consider liking, subscribing, sharing, commenting, as well as ringing that bell. That way you never miss another potential home run SPAC play. And for those of you new to this channel, please consider watching some of my old videos. That way you can catch up on the SPACs that I've already covered.